Thank you so much for joining us on the Dwelling Show. I'm your host, Ola Dantes. I've got the amazing Scott Krone with us today. Hey, Scott, how you doing?
Good morning. Thanks for having me. Well, I appreciate the opportunity to speak.
No, my pleasure, my pleasure. So, Scott, you've got a lot going on, but I'm sure you can do a way better job than I can. Can you tell our listeners a little bit more about who Scott is and kind of what you've been doing lately?
Well, those are two different questions. So, who am I? I'm just a normal guy, but I enjoy trying to make the most out of life. That's my primary focus, and so whatever I try to do fully and to do it to the best, and enjoy the process. So that's a little bit about myself. What we're working on right now is we set out a few years ago on a 5-year plan of creating 10 conversions of urban underperforming distressed properties and converting them into self-storage. And so we're on that journey right now of completing that 5-year goal.
Very fascinating. So we definitely want to talk a little bit more about that. Very fascinating. Of course, self-storage is one of the asset classes that is doing pretty well during this pandemic. Not to anyone's surprise, but way before you even went into converting assets into self-storage, what were you doing before, and what was kind of the impetus to move into real estate investing? And can you just kind of share that story of how you kind of got started in the real estate investing space?
Well, I began when I was getting my master's in architecture, and my professor, is the TA for him, he owned a real estate development company, which also did architecture and construction. And my master's thesis was a 400-unit multifamily mixed-use project on 50 acres. And so my background was really in the multifamily world. And so I worked on that project while in school, and once I graduated from school with him, and then a couple other projects. And we also did condo conversions from apartments into condos. So we were managing apartments at that time. So my background was really in the multifamily world. And then in '98, I started Coda, and we focused on residential. So our first project was a single family house. We bought a property, tore it down, built a new one, and sold it. And so that's how we began Coda back in 1998. And from that point forward, we began working on just different single family or multi-family, mixed use, just a wide range of products. We began also working with different churches, and we have now done 5 churches, or worked with 5 different churches. And everything changed when the crash came in '08, '09. And then in 13, I had a client. I was coaching real estate, and he wanted to find a distressed self-storage, and I couldn't find a distressed self-storage. But I always told him, I said, the real money in real estate is not in necessarily buying something and just holding it, but it's also in development. So when you change the program of something, you're increasing the value as well as the cash flow, and that's where the real valuation comes in within real estate. And so we came across a building that was going to be for another client, and it turned out we couldn't do it. But I suggested or offered it up to him, and he brought his team in to assess the feasibility and the viability of this project being self-storage. And they said, well, it's perfect, but we don't have anyone to develop it or do the entitlements. And so well, we can do that. And so that's how I got into self-storage in 2013.
Fascinating as well, yeah. So I'm kind of getting the sense of like, even though you might not have, kind of the full broad knowledge of a particular asset class, when you get an opportunity, you just don't say, no, we don't do that. You kind of go, well, let me take a look at that. We might be able to help you. And you kind of go and understand the asset class because you have a pretty range, level of knowledge from different asset classes. So I think, is that kind of correct?
Well, we've developed that, yes. But I mean, ultimately, when I look at it from a development point of view, there's not a whole lot of distinctions in terms of the processes that we have to go through. There are things we have to learn specifically that are different between, for instance, in a self-storage locker is a much more simplified, apartment. It's an apartment without toilets and a kitchen, but you still have to understand what are the requirements for that blocks, in terms of what is the best way to go about the efficient way to do it. And so there are ways in which we've improved, we've learned, we've grown since 2013 and how we do it. And we've become more efficient, certainly, just as the same way we became more efficient in building single family homes or condominiums or townhomes.
So I read a book, How Developers Think. I don't know if you've seen that book, and he talked about how, I consider myself a real estate developer as well, but how developers come from kind of different disciplines, right? From kind of different backgrounds. But for you, you actually studied architecture, right? So that's kind of like an interesting way to become a developer, right? So my question to you is, do you think your architectural degree actually helped, as you were working on your development projects?
Oh, absolutely. Not just my architectural degree, but my construction background. So my background is really, if I go back and look at it, I have a bachelor's degree in history. So, how does a bachelor's degree in history get a master's degree in architecture, then becomes, a real estate developer? But, without a doubt, when I'm looking at a project, when I'm assessing a building, I'm not looking at it through one lens. I'm looking at it from, a financial point of view, a developer point of view, like how are we going to change this program? How are we going to increase the revenue or the performance of this project? I'm looking at it architecturally in terms of like, how are we physically going to be able to accomplish this? What's the space that we're going to be able to do? And then from a construction point of view, like what's this going to cost? And again, how are we physically going to be able to do that? And will the design be compromised by the construction? And so I'm really looking through three factors. So the last church that we did, they came to us and said, we'd like you to help us acquire a building. We don't know how to do it. And I said, the first thing you have to do is stop acting fully like a church and start acting a little bit more like a developer. And they're like, well, we want to walk by faith. And I go, I get that. So here's what we're going to do. If you act a little bit more like a developer, I will try to act a little bit more like a church and have, I am a Christian, but, walk more in faith that this process will happen versus, a developer is always in control and, or tries to be in control, I should say, or thinks that they're in control, more importantly. So I said, if we both agree to become a little bit more like the other, can we get this thing done? And they said, yeah, that makes sense. So I said, the first thing you do is make multiple offers. You got to find multiple properties and make multiple offers. Because what's happening, you've been trying to get a church for 20 years and that you pursue it and it goes down this path for a year and a half and then it falls apart and you don't get it. And then you start the process over again. So the first thing is, let's just make multiple offers. Let's explore 3 or 4 or 5 different opportunities at the same time and see where we're led to go. Let's just see how the process works. And so we helped them acquire this building. We entitled it. We got them the financing. We did the design for them. We went with the city officials. We got it zoned. We built it for them. And then, they're now worshiping there. And it's phenomenal to see the fact that after 20 years, they're in their building. And, they had a big celebration. They brought in a bishop from Rwanda, actually the Archbishop from Rwanda, to help consecrate the building. And it was just a very special time. But my point being is that we were able to do the process from A to Z for them, because we have that experience of being a developer, working on the design and then also working on the construction. So we mold all three of those together.
Yeah, it's really fascinating. A really good friend of mine actually does something similar in the UK. He actually gets, buildings for churches, right? So dealing with pastors in the UK, is very fascinating because he tells me all the stories like, you have to act in faith, obviously, as well, like as you're dealing with them. So I can understand that dynamic, and I'm definitely well aware of that. So that's an interesting story. I do want to go back real quickly, kind of before we dig into this interview here. The '08 recession, right? How did you weather that storm? Because some of us obviously, went through it, but not as an investor. But how did you weather that storm, and what did you guys do differently, and how did you come out of it, somewhat unscathed?
Well, I think everyone got scathed. The biggest thing is when The Big Short came out, I don't know if you remember that movie.
I do.
I took my oldest daughter to it and we watched it and we walked out of the theater and she said, I can't believe people were doing that. And I said, I was doing that. I said, we were all doing it. And I said, the biggest thing is the banks were being forced to do it. They were being forced to provide this lending because if they didn't do it, then they would be going out of business. So I said, everyone was taking advantage of it. But prior to 08, 09, I don't remember if there was the internet bust. You know, there was the first, had a first dip in the economy with the internet. And leading up to that, I was very attuned to Greenspan. And all Greenspan kept talking about was the internet tech bubble was going to burst. And he kept saying it. He kept saying it. I'm like, why is this guy just trying to burst the internet tech bubble? You know, because I'm looking at my stock portfolio. It's going up. It's great. You know, and I'm making money. You know, it was like the easiest thing to do, right? You know, it was, you didn't have to try. You didn't have to understand it. You just had to say, here it is. And, you know, it would happen. And, you know, when I began hearing him say that and then it crashed, you know, I didn't listen to him the first time. But then as the real estate bubble was ramping up, he kept predicting that there was going to be a crash. There was going to be a crash. And the last property that we bought before that cycle, I bought a property for $600,000. We put 500 into it and I sold it for $1.65 million. And I only had $60,000 into the deal. So if you think about that rate of return, it was phenomenal. And he was saying that there's a crash coming, and I sold it. I mean, it was originally listed for like 1.8. And this is when things were selling above asking price. So the fact that I took a $150,000 reduction on the price, I went to a local developer meeting and they were all criticizing me. They were all yelling at me that I was undercutting the market, you know, that I was, destroying the marketplace because I took a deduction and all this. And I said, look, guys, I'm out. I'm done. You know, I'm not concerned about the next one. So I stopped buying. And then when the market crashed, we had 2 remaining properties that we had, and we sold them. We sold them. We didn't give a single property back to the bank, but my bank went under. And, you know, it's now just starting to, it was bought out and then bought out, but, you know, that bank no longer exists. And that was a bank that my grandfather and father, with their die casting business, which they sold when I was in college, that was a long-term family relationship with that bank, and, you know, just utterly gone. And so what was also leading up to that, and this is something I was very cognizant of when you were asking me about being a developer, carpenters I had hired, who had just started their carpentry company, who literally came to the United States, could almost not speak English. And I'm not criticizing immigrants because I believe in the American dream, and a lot of our subcontractors are all that way. But my point is, someone who came to the United States, doesn't have a full understanding of the language, was a carpenter, now as a developer is getting financing for $2.5–3 million homes, and dentists, lawyers, everyone was trying to become my profession without any training. And that was that's my point, is people that didn't have the training in this were becoming developers of not just like $150,000 home or a $500,000 home. I'm talking like $2 and $3, $4, $5 million homes. And they were just popping up everywhere, and people were overbidding for pricing. So when I'm looking at these factors, I'm listening to this, I'm saying, this is not healthy. This is too aggressive. This is leading itself to a crash. And so that's when I just stopped buying. And so the same thing when I sold off all my apartments. You know, I saw the cap compression, and I figured, like, there's not going to be a better time. I'm going to get out. And that's why I've been focusing on self-storage, because there was too much cap compression within the apartment market. So in each of these cases, when I'm looking at it as a developer, I'm looking at what's happening in the marketplace and where are there inefficiencies that I can take advantage of. And one of the things that we focused on was there are not people really developing self-storage or converting these things. And I can do it at 60% below the cost of a new construction. So I was like, why not go into this market?
Fascinating. So I think that's a great segue into self-storage. Obviously, I'm a big fan of multifamily, but now kind of into development as well. But I want you to talk a little bit more about kind of like when you say conversion of self-storage. So kind of go through, I guess, a few things or mind-blowing facts about self-storage investing, because it's kind of new for most listeners, I'm guessing.
Well, as I mentioned, think of it as apartments without toilets. So it's the most simplistic apartment building you could possibly come up with. It's corrugated metal with a wire mesh top. We're buying a big old commercial building that's either underutilized or empty. So for instance, we just bought a building in Dayton that had been empty for 30 years. And there's a lot of development going on around it, but they can't develop that one because it doesn't have any parking. So no residential multifamily person could come in and develop this thing because they couldn't fulfill the parking requirement. Self-storage, we need four or five parking spaces. That's all. And in our buildings, people actually drive into our buildings, opening up their trunk, the garage door comes down, and they can unload their stuff. Totally safe, dry, warm, secure, everything. You know, it's totally safe. So in that sense, it's a very simplistic model. You know, when I was developing multifamily, it was all based around the parking. Everyone thinks that you start at the top and you develop the condominiums down. We would actually start with a parking structure and then figure out how many condos we could have up above it based upon the parking requirements. That was the whole model. That was the first thing that I learned when designing multifamily. And so we look at it differently from that perspective. So where we're coming in is seeing, like, if I'm looking at the demographics, I'm studying the marketplace, I'm seeing the predictability patterns of the buying patterns of the market, and then where does this property fit within that relationship, and what type of product do I have to provide? Is it more affluent, less affluent? Because that dictates the size of the units. The size of the units then dictates the revenue, which then dictates the value, all those sorts of things, and we work it backwards. The other thing I really like about it is, in multifamily, you would agree that your operational costs are averaging between 50 and 55% of your NOI.
Absolutely.
Or your gross revenue, I should say. Ours is 35%. We don't have the maintenance, especially with a new building that we put together. You know, we have all new roofs, all new HVAC, all new lighting, but we don't have the demand on the building. You know, if we get 4 people in our building a day, that's a lot of people. So I don't have the wear and tear. I don't have it. And my cost factor is about 10% of what multifamily is. So I can get like 800 rental units, and my cost will be under $8 million, $7-8 million. You know, when we did 400 units, it was $100 million in sales. So think about the cost perspective. You know, I can take a building, you know, $7 or $8 million in cost, and it'll be worth over $10 million because of the valuation of the income. And so those are the things that I looked at, and the predictability of it. And that's how we determine what we're going to do, and more importantly, why we're going to do it.
Wow, it's so fascinating. It is so fascinating. So you're doing, you know, a lot of this, you know, self-storage. You know, I'm kind of zooming into the future. Yeah, I mean, you did a bunch of development. You did multifamily assets. Now you're doing self-storage. I mean, where do you kind of see the future going for, you know, coder management or yourself? What are you thinking of for the future? Yeah, and how are you trying to kind of get, you know, more out of what you're doing right now?
Well, the bigger thing, you know, my mentor, you know, always talked to me about was not just thinking transactionally or, you know, vertically, but diagonally, which is transformationally. So we're always looking to say, okay, how can we develop and grow beyond what we're trying to do? And one of his favorite expressions is, don't think outside the box, throw the box out the window. And so
I haven't heard that one before.
so what we began doing is that's why we came up with the 5-year plan. And the idea was that if we had different assets, we could assemble a platform or a portfolio of assets, which would then increase our ability to sell it at a greater discount in the cap rate. And so we get greater compression. And so that's why we began on this. Before, I was very transactional, thinking like one deal to the next, and not thinking like, especially when we're just doing design build, when, you know, you're always looking for the next customer. But then, you know, the vertical thinking would be like, well, if I get passive income, that will offset it. Okay, well, you know, horizontal thinking transactionally, I need this deal. Passive income is like, well, if I get passive income, then I won't have to, you know, I don't have to work as hard. Transformationally is like, how am I building generational wealth? And that's where we're saying, okay, we're going to develop this portfolio to not just sell an asset, but if we get a group of assets together, then we will be able to get a better pricing for all of them. And so that's why we began platform 1, platform 2, and now we're on platform 3. Each platform has 3 properties. And one of the reasons why we do that is we want to show our investors that this is not a one-off. This is an intentional plan. This is a marketing concept that we came up with that says, hey, we're starting here, we're going to end here, and this shows you where we are through the process. And so right now, we're looking at platform 3, Floyd. So that's our second property in the third platform. Once we get the third one, then we'll start platform 4. And then people will, now see, these guys have been doing it a while. These guys, know what they're doing, et cetera, because otherwise, if you just say, hey, we're doing a self-storage facility, well, how many have you done? Now we can say, well, we're on our third platform. These are the other assets in the portfolio, and so on and so forth.
Wow, Scott, fascinating stuff. This is like really, really interesting. I wish I could keep going on, but we're definitely dwelling into the quick rounds. These are going to be quick questions, quick answers. Okay. You ready, sir?
I am.
All right.
Just like running back, I got to get it
ready. First question. What makes you, Scott, unique? What is that differentiating factor that separates you from the next guy or the next girl?
Well, I think we talked about it a little bit already, the fact that I do bring not just the developer side of it, but the architectural, background to it, as well as the construction management, that we do all 3 things. I think we're one of the few companies, if not, I like to pride ourselves on the only company that does all 3 of these things in this space. And so for us, that's our differentiation within the marketplace.
Awesome. Next question. What was the last book that you read? What was the one thing you picked up from that book?
Well, I'm reading it right now. It's called The Invitation to Journey. In fact, right before you were running, but I was reading. And
just so you know, I was reading too. I'm reading this book right now. Before I ran. So it's read and then run.
See, I was paddleboarding and then reading. You were reading and then running. So we both get them both in, right? But what I like about the book is it's about life as a journey. It's about transformation in a journey. And, so much we're in the instant gratification culture. And, that's what we say to our investors. Hey, look, this is not a microwavable investment. This is an investment that's going to take time to develop and marinate. It's going to take 3 to 5 years in order to get to this full valuation of this. And I think that's like life. So often we just want the instant stuff, but not really working on the deep down stuff that really creates transformation.
Yeah, I mean, I talk about this a ton. Obviously, I'm a millennial, and, our generation, especially in the social media generation, is just the instant gratification is just pervasive, frankly. So yeah, I can totally relate. Final question. You've got obviously Coda, you've got all your units, you're doing a ton, you're super busy. What do you do for fun?
Well, we were very blessed. COVID was a very hard time, but I will say that we were also very blessed during that time. One, my kids all came back home. One was still living here, but the other 2, one was off at college. The other one was playing junior hockey, and obviously everything got shut down. So we came up with an idea that every night someone in the family had to come up with a new and unique idea for us to do as a family together. And so we did a whole range of different things. In fact, I bought like the Lego Saturn, the Saturn 9 rocket that went to the moon, the first one that went to the moon. So we spent a week building this rocket because we all had to take turns building it. We just couldn't have one person do it. And, but, I enjoy sports. I enjoy activities. I enjoy skiing. I play hockey. But this summer with COVID, our beach was stayed open. And so I spent the entire summer at our beach, which is only a couple blocks away with our family. And we were paddleboarding, we were sailing, we were jet skiing, we were doing different things. And it was just a blessing to be able to get away, be down there, not have to worry about social distancing. Granted, there weren't a lot of people out there because we're where our boat is and stuff like that. But we could take advantage of that. And we had an awesome summer. And that's what really rejuvenates me.
Yeah, I mean, and that's another really good point you've raised. It's really trying to make a, right trying to take advantage of a bad situation is kind of how COVID could be translated, right? You know, we have our
Exactly.
family together and really just making the best of it. Thanks for sharing that. If there's somebody listening and say, "Hey, I really like Scott," maybe they're in the Illinois, area, or just maybe anywhere in the country, and you just want to reach out and connect with you, what is the best place people can reach out and get to know you better?
Well, first of all, I want to say thank you again for having us. So, what I'd like to offer your listeners is if anybody comes across an opportunity where they think it might be an interesting place or a building for self storage, if they type in at our website info@codamg.com and they put the name of this podcast or your name, Ola, on it in the info bar when they go to codamg.com, if you go contact us, we will not only send them a feasibility study on how we evaluate a building or location, excuse me, but we'll also be one to jump on the call with them for an hour and discuss it. It goes through the pros and cons of that building, that location, and help them determine. I mean, this industry is small enough where we're not going to steal anyone's property. If you want us to sign a non-circumvent, non-disclosure, we'll be happy to do that, but that's not our intention of doing it. We just want to be able to help people out and understand the marketplace.
Oh, really appreciate that. Thank you. Appreciate your time.
Thank you.